We think it's worth less than it's being sold for, but the band of uncertainty here is enormous. Some shareholders will see value in it, some won't. But I think we have to recognise here that the key point is a lot has to go right for this company, priced where it is, to make sense as an investment.
Lachlan Holloway, thank you for joining the business.
Thanks for having me.
SpaceX, everybody's talking about it. Why is everyone talking about the IPO of SpaceX?
Well, it's enormous for starters, right? US $75 billion is going to be issued in fresh equity for SpaceX, the biggest IPO in capital markets history. That's something. It's got all the themes you'd expect of a headline-grabbing float. We've got rockets, we've got AI, satellites, Elon Musk. You know, all of these things are coming together, a confluence of factors just to make this an absolute blockbuster.
But it's yet to make a profit.
It is. There are some parts of the business that are very profitable. You know, the satellites part of the business that people might be familiar with, and that is very profitable and very fast growing. But other parts, the AI bit and the rockets bit, less so, at least today. But there's a lot of growth potentially ahead of it, and that's certainly the story that management are trying to sell.
What's difficult for a lot of people to understand is that you can't actually have any forward earnings on this company because it lacks the fundamentals to achieve that. It's making a loss, so you can't actually predict future positive earnings. For any other IPO, people would look at this and think, well, it's a lemon, and too speculative and too risky and stay away from it. And yet there has been enormous interest in it. Why? Is it Musk?
I think that's part of the story. The other thing is it is growing very quickly, at least its revenue. Perhaps not its earnings yet, but if something is growing revenue very fast, you can see a pathway to profitability eventually. You know, especially, as I said, with the core satellites business, which, you know, many people might be familiar with, it is a good business and it's funding a lot of the other loss-making bits. But when it comes down to it, if you believe the story, if you believe Musk's vision of domination across satellite communications, across rockets, colony on Mars, and an enormous AI enterprise
city on
software.
Mars.
Well, that's right. All of this potentially ahead of it. You can make it make sense, but on 100 times.
I think that's just it, though. You can make it make sense. It doesn't just automatically make sense.
No, it doesn't. And to us, it doesn't. Right? We think that SpaceX stock is worth about half of what it's being sold at in the IPO. On 100 times revenue, that is an enormous multiple for any company to be trading on. But look, Musk has defied his doubters before, and he can build a business. And if you believe him and you believe Musk, all right, maybe it makes sense to us. It doesn't, but to some shareholders, it clearly will.
Are you confident it'll hold its value over time?
No, if our forecasts are right. As I said, we think it's worth about half of what it's being sold at in the float. That said, it may pop on day one, as IPOs often do. We don't really know. It's just that's the territory of speculation trading, which we don't really get involved in. The longer term pitch, though, is probably not good value at these prices, but the band of uncertainty here is enormous. We have to recognise that. There's upside risk here and there's downside risk here, and I think with something that's just so untested and so nascent, you really have to be conscious of that when you're trying to invest or thinking about investing in a stock like this.
Well, big institutions are usually confident and conscious of those big risks. This time around, it's a bit unusual. The SpaceX has an allocation of shares, and it hasn't prioritised, but it's allocated an unusual amount of shares to retail, mums and dads investors. Why has it done that?
Well, in part because I mentioned earlier, it's big, right? If you've got a lot of stock you've got to sell, well, maybe you have to look beyond the traditional fund managers that you might be targeting if you're a conventional IPO and looking to more and more of the retail investors. That said, I think Musk and the other SpaceX insiders probably know that his brand resonates quite well with retail investors. People know him, people believe in him. He's a bit of almost a cult-like figure, right? So he knows he's going to get interest off the back of that. And if you do want to structure, history would suggest, if you do want to structure a successful IPO, one that pops and does well early, having a lot of retail interest, investors who may be a little bit less discerning when it comes to valuation, is probably a good thing.
A little less discerning when it comes to valuation. That's not a huge endorsement for why institutions may or may not be in it.
Look, I mean, some institutions are going to have to hold it, right, because they're passive investors and they'll be in it regardless whether they want to or not. There'll be active ones who might just sit this one out or lean into it. We'll see. I think the risk is that, as I said, it doesn't necessarily mean it's going to be a bad investment. We think it's worth less than it's being sold for, but the band of uncertainty here is enormous. Some shareholders will see value in it, some won't. But I think we have to recognise here that the key point is a lot has to go right for this company, priced where it is, to make sense as an investment.
Okay. You mentioned earlier that in terms of superannuation, or that some retail investors or many Australians might find themselves invested in SpaceX regardless of whether they know anything about SpaceX or whether they want to be involved in SpaceX. Can you explain how Australian superannuants might end up indirectly owning SpaceX without their knowledge?
Well, if their superannuation allocation it has some exposure to the US, the NASDAQ, for example, passively involved in the US at index weight, they will pick up some SpaceX shares through this IPO process because it has been fast-tracked for inclusion into the NASDAQ, which means it's going to come on quicker than usual, and it might wind up in some Australian allocations in super, or perhaps their direct shareholding accounts if they are subscribed through it directly. Look, as I said, it is going to be almost certainly amongst the superannuation portfolio a fairly small part of a very large range of investments. I wouldn't get too hyper-focused on this one small part of it, keep that in mind. But obviously, with anything, you have to make sure that your allocation, your super makes sense for you. Maybe it does, maybe it doesn't. Maybe SpaceX plays a role there and maybe it doesn't. But that's a question for the individual investor.
Just pivoting a little bit to gold, because we've talked about risks, and you would think that there's a lot of risk in SpaceX. Elon Musk is floating this company at the peak of the market. There's a lot of market volatility. But what we've seen traditionally with gold is that people jump into gold when things get hectic. The opposite is happening now. We're seeing gold, it was down 25% at one point from its all-time high earlier this week. Why is gold so on the nose?
Well, you'd think if we just described some of the geopolitical risks and tensions and uncertainty, that the gold would do well in this kind of environment, right? We've got war going on, continuing in Iran. That's a big uncertainty, what's going on with Trump, the US administration, and so on. The problem is for gold at the moment that the other big narrative in markets is now an expectation of rising interest rates, particularly in the US. Now, that's changed really in the last week or so in a big way. We've got a very strong piece of data, the jobs report out of the US, and markets have revised their outlook for what the US Federal Reserve is going to do with rates. And they're now expecting that there's actually a strong likelihood now of a rate hike, not a rate cut, which they envisioned a few months ago. Gold doesn't do well when interest rates are high and rising because it doesn't yield anything, right? You don't get a coupon from gold like you do with a bond. So as the opportunity cost of holding gold increases, you find investors pivoting out of that and into other yielding assets like bonds, for example.
You've mentioned the two words that are on the minds of millions of mortgage brokers, millions of mortgage customers, I should say, across the country. When we look at interest rates, it is clear, as you've mentioned, that US interest rates are potentially going to stay on hold or rise. The opposite could be true for Australia. We've got the Reserve Bank meeting again on Tuesday. We've had HSBC and the NAB say the next move in interest rates is actually going to be down after a long period of hold. What do you think?
Look, this is a very finely balanced one. I think there's an argument on both sides to caveat it a bit. I think there's still an argument here that we might see more hikes, maybe one or two, because we do have this...
Or two?
Well, potentially. I mean, I don't think that's totally outlandish to think that there might be more to come from the RBA because we have this productivity problem in Australia. We can't grow very quickly without hitting the capacity constraint of the economy and generating inflation. Until that's resolved, we are going to, I think, see these continued bumping up against inflationary pressures as the economy tries to grow out. Now, the risk, of course, is, I mean, the big one here is how this conflict resolves and how much of these price pressures, say from oil, start to feed through, obviously, into the fuel part of the basket, the consumer price index basket, but more broadly out into other goods and services. Now, there's a lot of uncertainty around that. The RBA might, of course, over-tighten, and we see a sharp deceleration, and the soft consumer sentiment print that we saw recently would suggest that maybe things do have potential to slow. I think it's very finely balanced here. Rates on hold, maybe up, maybe down. It's very hard to call, and I know that's a little bit coy.
No, it's clear as mud, but it's very understandable.
But there's so much uncertainty, right? And I think you have to be a little bit cautious. And to broaden out here, when we think about equity investing, at least, we're not so concerned about whether the next move in the next month is on hold or if it's up or maybe it's down. That's not where we focus our time as longer-term investors. We're looking a bit further down the road and not so concerned about trading and positioning on short-term central bank decisions.
Very prudent. Lachlan Holloway, thank you so much for joining the business.
Thank you very much for having me.